Watch his exceptional story, Pursuits by Škoda, only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a muted start as sentiment remains divided between trade tensions and hopes of the Federal Reserve cutting interest rates. Oil prices trade near bear market territory as fears of a global recession rise. The Reserve Bank of India will not approve audits conducted by S.R. Bartley Boy and Company after it found certain lapses in audit assignments carried out by the local chartered accountancy firm. A high-level committee led by Nandan Nilekani has recommended that the RBI consider reducing the interchange on card transactions in order to boost digital payments in India. And Fitch Ratings has downgraded two private sector lenders, that's ICICI Bank and Axis Bank, over challenges pertaining to the operating environment in India and weak core capitalization. Let's talk about the US markets now. It is a flat to negative start to the trading week for the US markets, while a sell-off in FANG stocks dragged the Nasdaq lower by over 1.5%. The S&P 500 closed 0.3% lower, and the Dow ended largely flat. Manufacturing data falling to its lowest since October 2016 also impacted investor sentiment. Ranita Young of Bloomberg News tells you exactly what happened in that Wall Street session.
U.S. stocks were mixed on Monday after fluctuating between gains and losses during the session, with the communication services sector leading the declines in the S&P 500, with tech shares not that far behind, although caught in the crosshairs of regulatory activity in the United States. Now, investors are still trying to digest the latest actions in the U.S.-China trade war that happened over the weekend and a little bit into Monday. This is also happening as U.S. President Donald Trump travels to Europe, in which he will meet with British Prime Minister Theresa May just before her last day in service. This will happen later on this week. Now, something else interesting happening is there is speculation that the Federal Reserve may warm up to rate cuts that actually sparked a Treasury rally. And because of that, the yield on two-year Treasuries dropped to its lowest since 2017. And markets are also reacting to U.S. manufacturing data, which hit its lowest in almost a decade. On top of that, we saw another key measure of American manufacturing falling in May to its lowest since October 2016. So a lot of news there hammering stocks. But one thing we did definitely see was heavy selling within FANG stocks, tech stocks that were Amazon, Facebook, Google parent Alphabet, as well as Apple, which are all set to undergo regulatory action. And this sent the Nasdaq 100 down more than 1.5%. However, a bright spot in Monday's session happened within chip makers. And this happened at the very start of the trading session, with Infineon Tech saying it will buy Cypress Semiconductor in the latest big chip mega deal. Now, this happened as shares of Infineon were a little bit lower. However, Cypress shares rose as much as 24% during Monday's session. And that's a look at your Monday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's also take a check on the Asian markets. In fact, I'm joined live by Rosalind Shin, who's joining us from the Bloomberg Hong Kong studios. Morning, Rosalind. I was looking at the markets just about 15 minutes back, and I was failing to see a clear direction now that the Chinese markets have opened, and on the back of the pressure on tech stocks in the US. Are you seeing any clear direction for the Asian markets?
It'd be hard to say clear direction, but I do see that the MSCI Asia Pacific Index is erasing some of its earlier gains. It has just about been able to eke out gains for another session, a third session over here. But it does look like those gains are starting to go away as the day goes on, and of course, as you mentioned, as the Chinese markets join the fray. So right now, it's only up by 0.02%. The Chinese markets, as you mentioned, opened a few moments ago, and they opened lower. So we've got the Shanghai Composite down 0.4%, and the CSI 300 index trading lower by 0.17%. Now, around the region, we do have not great news. We've got the yen, of course, that safe haven, ever strengthening strengthening, and that is also making gains for a third day. Of course, we've got the yen currently at 107.87 against to the US dollar. The factors, though, which are driving down the dollar aren't really the ones in the BOJ's control, though, so there's not a lot to do there. Of course, there's the whole background of the trade frictions, the treasury yields are pricing in lower Fed rates, and of course, global PMIs are starting to point to recession. So those things are not things that the BOJ can really do a lot about. The topics right now is losing 0.3%. In South Korea, the Kospi is losing 0.2%, turning lower for the first time in 4 sessions. We did have some revised data today showing that the South Korean economy contracted more than initially estimated in the first quarter, shrinking 0.4% in the first quarter from the previous 3 months. Inflation ticked higher in May, though, from a long-term low just 2 months earlier. So the BOK governor has been saying that the first quarter GDP contraction and the worsening trade conditions, of course, the US-China trade tensions have bolstered expectations of a rate cut, but now is not the time to cut. They're concerned about high household debt and also financial stability. And finally, a look at Australia, because that is making gains of nearly 1/5 of 1%. RBA policy meeting today, and of course, a rate cut is seen as extremely likely there to what would be a record low of 1.25%. Back to you.
Thanks so much for that, Rosalind. Well, we briefly mentioned the FANG stocks that declined and dragged the Nasdaq. Well, the company's lost close to $137 billion in market capitalization in just yesterday's session. That's after the U.S. Federal Trade Commission said that they would be investigated for anti-competition practices. Derek Wallbank of Bloomberg News brings you more on this.
You have seen a major escalation in terms of antitrust enforcement with relations to U.S. tech giants. I think that this move is one that has been percolating for quite some time, but it's still sent shares of major tech giants absolutely crashing today in U.S. trading. And one of the things that I think that you're looking at, and now it's a little bit different across all of these platforms, but with Google and Amazon, you're sort of looking at looks into how dominant a player are they in their space? How much can they affect their space? How much can they affect others' space? That's particularly a concern with regards to Amazon, both in terms of small businesses, also in terms of e-commerce. Facebook is a little bit of a different animal. There's criticism, obviously, from the left and the right on how it deals with various views and various political actions. Democrats particularly are concerned with how Facebook was, they say, manipulated by Russian agents in the lead up to the 2016 election. And as you quite rightly mentioned, President Trump has complained about their moves related to conservative voices. All the while, Democrats complain on the other side that they haven't done enough about white supremacists. So there's a lot of arguments in Washington going on about what should be done, and people saying something should be done. I should also point out real quick, this comes in the context of the upcoming presidential election, and you have some major Democratic candidates led by Elizabeth Warren calling for flat-out breakups.
Yeah, Derek, you talk about the major challenges facing these companies now as a result of these investigations, and of course investors, as you say, their reaction was pretty severe. So I guess the question is, what's the worst case scenario for these companies?
Oh, goodness. I really love playing worst case scenario, Tom. I appreciate you indulging me here. Look, I think that the market moves this morning showed that this wasn't fully baked in. Anytime I see a really big move like this, I sit there and go, oh, wow, you really weren't expecting that level of risk, were you? I think that the Democratic plans in terms of breakups would represent a pretty big risk, although there's some question of whether or not it would solve the problems that people are looking for. Any sort of real hampering on business model, I think, would be key. Breakups where a company would have to choose what they wanted to do and what they wanted to sell across, like an existing core mission versus something that they were developing that they see real promise in. I think that would represent a material risk. So I think that there's a large number of things on the table, but I will stress this. This isn't the first time that some of these companies have seen antitrust probes. Google, for instance, has dealt with this in Europe quite a bit, and so they've got well-honed plays here. You might see an increase in lobbying spending, but there are some well-worn plays. I think the companies have been prepping for this for quite a while.
All right, meanwhile, the trade tensions between the US and China seem to have no end in sight. The US has now accused the Chinese administration of pursuing a blame game in recent public statements, including a white paper that was released over the weekend that, according to the US, misinterpreted the issues at large. Jody Schneider of Bloomberg News brings you this report.
We hear one side from the U.S. and one side from China. It looks like in recent days, things are escalating more, that President Trump will make some comments and then China will come back and sort of a retaliation. So far, there hasn't been any real effects of this, but we do sort of we're seeing these rising tensions kind of day by day, and frankly, no break in them, no discussion about when talks may resume. Anything that looks like an olive branch is not coming from either side.
Definitely, Jody, and we're seeing more moves inside the U.S. to try to curb China's influence here. We are even talking about perhaps student visas being curbed. What are we hearing?
That's right. First it was trade, then technology, and now talent, as we're seeing with students. This has been one area where the U.S. and China have really cooperated with the number of students, largely going to the U.S., but going back and forth in their education systems. There's about 360,000 Chinese students at American universities currently, but we've seen in the last year, the increase go down by half to 3.5%, and now it's taking what used to take weeks for this annual renewal of these visas is now taking months, and students are starting to see that they're having they're really feeling like there's some real question about whether they're going to be able to stay at U.S. universities, and also they're starting to think about going back, which could have some repercussions for the U.S.
Now let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with South Korea, which contracted more than estimated, or I should say contracted more than estimated in the first quarter. GDP shrinking 0.4%. That's a tenth more than forecast by the BOK back in April. However, despite sliding exports and the wider global slowdown, the bank says the domestic economy should expand this year in line with its projection on 2.5% growth. Inflation ticked higher in May from a long-term low 2 months earlier. To President Trump now, he has waded into Brexit politics at the start of his state visit to the UK. He called on the country to throw off what he described as the shackles of the European Union and hinted at a big trade deal if Brexit goes through. Brexit critics say a trade deal with the US could imperil the National Health Service by increasing the involvement of private American companies in the UK public sector. The U.S. and Mexico, meanwhile, have begun talks in Washington following President Trump's threats of tariffs. He's proposed putting duties on all imports from Mexico if it doesn't try to stop illegal immigrants crossing the U.S. border. Mexico says tariffs could cause severe financial and economic hardships and may hurt the government's attempts to stem the movement of migrants heading for the U.S. A Swedish court has ruled that WikiLeaks founder Julian Assange does not need to be extradited there as part of a rape investigation, but should still be questioned in the UK. Assange denies wrongdoing in that case. He was arrested last month in London after seeking political asylum at the Ecuadorian embassy back in 2012. He is still fighting extradition to the US on charges of publishing secret documents. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, now let's tell you all about the trade setup for the day in India. Agam Vakil is here to tell you all about that and also what's happening in the futures and options space. Agam, some concern, at least among the viewers who are tuned in, based on yesterday's rally and the fact that the Nifty is trading at all-time highs.
Yeah.
Will there be a contraction is what they're worried about.
Right. So, Alex, we need to understand what's been typical of the markets over the last 2 or 3 weeks is that we start off on an extremely flattish note and eventually we see a very sharp move
Correct.
on either the direction, the latter half, the session. That's likely to play out today as well. Yes, we saw the lifetime highs. We did see, well, substantial increase in a whole host of stocks, but we must also remember that this was on the back of heavy volumes. That means there was buying, and we also had, well, nearly $500 million coming in from the FIS table. So, well, all these factors, if you consider, we may not necessarily be in tune or, well, in store for a correction, at least in the near term over the next few sessions. You never know. We do have the RBI credit policy, but we're going to have to watch out on that one. For now, though, the SGX Nifty futures is indicating a decline, but again, SGX Nifty futures isn't the best of parameter and hasn't been these days to go about how we can, what we can expect in the markets. Let's move on and talk about how we did yesterday. So a lifetime highs for Nifty closing at about the mark of 12,000 for the first time, up 1.4%, mid cap and the small cap indices, well, gaining too. In terms of the banking indices, again, well, moving largely in tandem with the benchmarks. ADRs for now, well, are looking at a mixed picture, but Wipro and Tata Motors, along with Vedanta, are advancing certainly. Let's move on and talk about, of course, Dr. Reddy's is the other one which is showing some amount of strength. But to talk about your fund flows, and this is why I was saying about 3,000 crores coming in from FIIs, and DIs haven't sold as much, just 462 odd crores moving out on a net basis. So keep an eye on that one. Naturally, with a 165 odd point up move, we did see a lot of strength from Reliance Industries, HDFC Twins, and TCS, all heavyweights on the Nifty. Let's move on and talk about your futures and options space, and this is where you're starting to see things turn around. A 12% increase in the Nifty futures open interest towards fresh longs, even as the underlying advances by 1.5%. 10% increase in the bank Nifty. This all indicates that bets have been made for a further up move from current market levels. As far as your open interest is concerned, even though we have seen a little bit of writing around the 12,400 call, there is plenty of, well, support building in the lower level calls, and in fact 12,000 is now secure, it seems like, considering the kind of OI that we're seeing built up in that put. Let's move on and talk about your open interest distribution, and this is where things can change, and this is what indicates what we can expect moving forward. Until yesterday, we had maximum open interest in calls, and now we have substantially more open interest in puts, which means there's support at every level from 12,000 to 12,000 to 11,900 and 11,800. All these factors for now are indicating that markets are strong. The sentiment is positive. The India VIX has of course come off. This is at extremely low levels at 16, and moving on to your Nifty put call ratio, this may be high at around 1.75, but you don't really go to see too much into it and read too much into it. Let's move on and talk about your stocks then. Apollo Hospitals, Repco Home Finance, and Just Dial seeing gains. Something like an Apollo Hospital seeing a surge, and of course in terms of stocks which are seeing unwinding, not too much there, but Coal India, Apollo Tyres, and Berger Paints. So I'd be wary of shorting these markets, Alex, even though that they are at lifetime highs.
Absolutely. Thanks so much for that, Agam. Well, at least some of you can feel a little comforted by Agam's trade setup. If you want to know more, of course, you can tune in at 8 o'clock and, of course, through the day. 10 o'clock is when Agam does his FNO setup, or FNO show. Let me take you through the big update from last evening, though. The Reserve Bank of India has barred S.R. Bartley Boy & Co., an EY firm, from conducting statutory audits of commercial banks during the current financial year. This after the regulator found certain lapses in an audit carried out by the firm. Vishwanath Nair reports.
The Reserve Bank of India on Monday has said that S.R. Bartley Boy & Co., the chartered accountancy firm, will not be allowed to take up any statutory audit duties at commercial banks for at least a year, starting from the 1st of April 2019. Now, according to what the Reserve Bank of India has done, this is part of the enforcement framework that the Reserve Bank of India had created last year, where it had said that if it finds that a certain auditing firm has been lacking in its duties, or if there are any lapses in the assignments undertaken by this this auditing firm, that it will be empowered to take action against such a firm. Now, in the statement about SR Bartley Boy & Co., the RBI points out that it had found certain lapses in the way that that this company had done previous assignments on statutory audits, and therefore it was initiating this action. It is not yet clear on which bank's case has the RBI found these lapses. However, it is important to note that the RBI points out if these lapses have resulted in the misstatements of financial results by certain banks, then obviously the RBI will take action against these companies. Now, SR Bartley Boy & Co., from what we know through public records, is the statutory auditor for large private sector banks, including HDFC Bank, Kotak Mahindra Bank, as well as IndusInd Bank. Apart from this, it used to be the statutory auditor for Yes Bank back in 2016. And if you remember back in the day, Yes Bank had reported large gross NPA divergences after the RBI undertook the asset quality review of 2015 and 16. Not only that, it again reported large divergences the following financial year. And because of this, it is said that Rana Kapoor, the former MD and CEO of the bank, was asked to not continue his term beyond 2019 January 31st, because of which he actually had to leave the bank, and a new CEO had to be appointed at Yes Bank. Now, again, just to make it clear, the RBI has not specified which bank it is talking about when it is saying that certain lapses were found in the auditing assignments. However, it is important to notice that all of these other banks will likely get impacted in the coming year.
All right, and banking, by and large, is going to be in focus this week. Monetary policy just a short while away. The clamour has grown for the Reserve Bank of India to cut interest rates after the fourth quarter GDP growth fell to a 20-quarter low. Money market experts believe that the central bank must bring in some real reforms, as growth is not only based on cutting interest rates. Listen in.
There could be a positive surprise as well. Some people are calling for 35 basis points and a few exuberant ones are calling for 50. If you look at the OIS markets, the swap markets, they're already pricing in 50 basis points, if not in June, at least June and August put together. I think I'll go with the consensus. I do agree that most likely we'll see at least a 25 basis points rate cut on Thursday. We would also see liquidity turn positive during the course of this month. And there is just too much of pressure on the RBI and the MPC to deliver some palliative and painkillers to an economy which seems to be hurting. So I think they will kind of succumb to that pressure. It's a different question on what ought to be done. And it's not that easy an answer as the bond market would make it out to be. I think there are strong arguments where we should be very, very careful at this point in time. But given the context, I do expect a rate cut to come through.
Let me ask you about one of those. And Siva, so, we got a 5.8% print on GDP. I know that. But, if you look at the internals of it, consumption had weakened, but it's not out of the range that we have seen over the last 8 or 12 quarters or so, right? Investment, yes, it fell off very sharply, but, there could be very well one-off. So at least we should wait to see whether there's a moderation in investment before we start panicking. So an MPC, which has cut 50 basis points, has not seen transmission yet, could perhaps wonder whether this is the right time to cut right now, or should we wait until August?
I see that call is, I think, still out. And while I believe that RBI should cut rates, I'm quite open to the idea if they come back and say, okay, instead of doing it in June, we can do that in August. But in which case, give us something else. So let's say, for example, start moving the needle on liquidity. Because what we need to happen is, first, of course, we need lower rates. But what needs to happen is the market rates need to come down. We need to see bank deposit rates, lending rates, and of course, bond yields to drop. Because without that, the RBI can keep cutting the overnight rate, but you will not be able to sort of have any effect on the real economy. Real interest rates, as measured, for example, by, let's say, bank FD rates or lending rates minus inflation, continues to remain very, very high. And at the end of the day, that is what matters. The customer transaction is what matters when it comes to the real economy, not what the interbank lending rate is.
Anant, on that point of liquidity, what if they don't do another repo rate cut, and they say that we will allow liquidity to move into surplus? And you pointed out in an offline conversation that would automatically in some way means a 25 basis point cut because the market moves towards reverse repo potentially as an operative rate.
I think more importantly, than just the 25 basis point shift. By the way, the periods of excess liquidity that we saw, including after demonetization, the market rates didn't really move to the left hand of the corridor because RBI kept mopping up the excess money through ad hoc reverse repo at the repo rate. So they did adhere largely to the maxim of trying to keep the operative rate at the repo rate. But more importantly, if you have a sustained liquidity surplus situation, it does help transmit lower rates much faster into the ecosystem. In fact, we've argued this long together, Ida, that liquidity framework has to be an adjunct to the monetary policy framework. And if you want accommodative stance to be transmitted, having the banking surplus liquidity makes an enormous difference. In fact, Dr. Rajan did acknowledge this in April 2016 when he finally overturned a 5-year-old RBI policy to move banking liquidity to neutrality. Look, but I think a rate cut will come through simply because there's too much of pressure on the RBI to deliver at this point in time. NBFCs are hurting. The GDP number was a shocker. Lots of sectors are still doing pretty badly, whether it's power, whether it's airline and shipping, whether it's telecom, or you take your pick. Given an economy that's hurting, the clamor for relief is just too high. And I think the RBI will be forced to kind of acknowledge and provide the painkiller. But as I always say, the real reform that is required at this point in time goes far beyond lower interest rates. And I do hope in bargain that RBI does, or the MPC does, get some real reforms alongside as well.
All right, do stay tuned, of course. There's a lot more about the RBI's or the RBI Monetary Policy Committee's statement that you need to know about. And that, of course, will come out over the course of the next couple of days. For now, let's turn to Mishika Parak, who's joining us now to tell you all about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. There are lots of stocks making news today. The first one being L&T Technology Services, as the promoter Larsen & Toubro plans to sell around 3.8% of the stake of the company. They will sell up to 40 lakh shares at a floor price of 1,650 rupees per share, which is a discount of 4% to the current market price, through an offer for sale, according to an exchange filing of the company. The offer will open for non-retail investors on June 4th and for retail investors on June 6th. After the transaction, the promoter's stake in the company will fall to 75% from 78.8%. And if the offer is fully subscribed, the promoter will raise around 666 crores from this transaction. Wipro sets June 21st as record date for its share buyback. Dr. Reddy Laboratories is to relaunch Xenatane capsules in the US market. And GE Power has been awarded a contract worth 738 crores by NTPC joint venture for engineering work on a full turnkey basis. Now let's have a look at the Fitch downgrades. ICICI Bank's long-term issuer default rating downgraded by Fitch to a BB plus from a BBB negative. The senior unsecured debt rating rated by Fitch to a BB plus, and the outlook remains stable. For Axis Bank, the long-term issuer default rating has been downgraded to a BB plus from a BBB minus, and the senior unsecured debt rating was downgraded by Fitch to BB plus from a BBB minus. The outlook has been changed to stable from negative. Fitch says that the downgrade reflects agency's assessment of India's operating environment, with banks still struggling with poor asset quality and weak core capitalization. Lastly, let's have a look at the important bulk deals. Goldman Sachs Singapore acquired 8 lakh shares, which is 0.5% of Bharat Financial Inclusion, at 1,004 rupees each. Euro-Pacific Growth Fund is the seller for this transaction. Mahindra & Mahindra acquired 1.7 lakh shares, which is 1.5% of Swaraj Engines, at 1,387 rupees per share. Jupiter India Fund is the seller for this deal.
All right, thanks so much for that, Mishika. On to updates from the ICC Cricket World Cup, where after 4 one-sided contests, we've seen 2 close finishes in match 6 on Monday. Pakistan managed to end their 11-match losing streak, beating hosts and title favourites England by 14 runs. After being put into bat by England captain Eoin Morgan, Pakistan posted a daunting 348 for 8, led by half-centuries from Babar Azam, Mohammad Hafiz and captain Sarfaraz Ahmad. England fell short by 14 runs despite centuries from Joe Root and Jos Buttler. Left-arm quick Wahab Riaz picked up 3 wickets for Pakistan, while Mohammad Amir and leg spinner Shadab Khan picked up 2 apiece. Mohammad Hafiz was man of the match for his match-winning 84. Today's encounter will see potential giant killers Afghanistan locking horns with 1996 champions Sri Lanka. Both teams have been beaten in the first game by New Zealand and Australia respectively. The match begins at 3 p.m. India time. But that's also close to when the markets shut, so there's a lot that you can imagine will happen over the course of that time. Do stay tuned to Bloomberg Quint. There's a lot more happening. For now, let me tell you what's available on the website for you to read. Saudi Arabia's Energy Minister Khalid Al-Falih has said that the recent volatility in crude oil prices is unwarranted and predicted allied crude producers will continue efforts to avoid an oversupply for the rest of the year. Al-Falih's assurances didn't seem to calm traders, though, who are worried that simmering trade disputes will affect economic growth that underpins oil demand. Brent crude is currently trading just above the $61 to a barrel mark, whereas just last month it was above the $70 mark. That's all you need to know going into trade today, but do stay tuned. Like I said, there's a lot more coming up in just a short while. This is Bloomberg Quint.